Hey, have you ever looked at your savings and thought, man, my money should be working a lot harder? Well, if you have, you're in exactly the right place. We're about to make mutual funds super simple and get your financial goals ready for takeoff. Let's do this.
I mean, who isn't, right? We all put in the hours for our paychecks, so it's only fair that our money starts pulling its own weight too. And that's exactly the idea we're going to unlock today. And that's our promise to you. We're going to cut through all the complicated jargon and give you the straightforward info you need to feel confident enough to take that first really important step.
Okay, so let's start with the absolute basics. What even is a mutual fund? Think of it like this. It's the vehicle that's going to drive you toward your wealth goals.
It's kind of like a giant financial potluck. You chip in a little money, I chip in a little, thousands of other people chip in a little. And suddenly, all those small amounts become one huge, powerful investment portfolio. And the best part, it's all handled by a professional fund manager, the master chef of your money. So really, it all boils down to this power trio. By pooling your money, even a small investment gets to play in the big leagues. You get a pro making all the tough decisions for you. And, maybe most important of all, you get diversification, which means you're not putting all your eggs in one basket. It's a huge safety net. Now, here's a super quick but really important point. People mix these up all the time. Mutual funds are for growing your wealth. Life insurance is for protecting your family from risk. They do two totally different jobs. Think of it this way. One builds your financial house, the other insures it. All right, just like a pilot does before every flight, you need to do a little pre-investment check. Let's quickly run through the absolute essentials so you can start off on the right foot. These 3 steps are totally non-negotiable. First, make sure the fund's objective matches your own. Are you looking for crazy growth or just steady income? Second, know the risk. Be really honest with yourself about what kind of risk you're comfortable with. And third, read the SID. That's the scheme information document. It's the official rulebook for the fund with all the important details you need to know. Now for the fun part. Just like you wouldn't book a ski trip if you wanted a beach vacation, you need to pick a fund that matches your financial destination. So let's find the right style for you. Here are the 3 main flavors. Equity funds are kind of like the fast lane on the highway. They aim for high growth by investing in stocks, but they do come with higher risk. Debt funds are the steady, reliable lane focused on stability with lower risk. And hybrid funds? They're the best of both worlds, giving you a nice balance of the two. And the menu doesn't stop there. There are index funds that just copy the market, ELSS funds that can help you save on taxes, sector funds that let you bet big on one industry, and even funds that, well, they invest in other funds. There's literally a style for every type of investor out there. So, why are we talking about all this? What's the big payoff? Well, it's all about the long game. Because if you stick with it, the results can be pretty incredible. Let me show you the proof. Just look at this. This chart says it all. If you look at returns over 5 years or more, historically, equity mutual funds have often left traditional fixed deposits in the dust. That gap right there, that's where your wealth really has a chance to grow. So, what's the secret sauce behind those numbers? First, it's the unbelievable power of compounding. That's when your earnings start making their own earnings. It's like a snowball effect for your money. Add in expert managers who handle the market's twists and turns, plus that built-in diversification, and you've got a recipe for success. Feeling convinced? I thought you might be. And the great news is, getting started is easier than ever. Think of this as your launch button. You've got options. You can invest one big chunk of money all at once, that's a lump sum, or you can use a SIP, a systematic investment plan. This is where you invest a smaller, fixed amount every single month. It's an amazing way to build discipline and average out your costs over time. You can even set up plans to automatically transfer or withdraw your money. It's super flexible. And when I say you can start small, I really mean it. You don't need a ton of cash to get started. A lot of SIPs let you begin your journey with as little as 500 rupees a month. That's it. That's less than a few coffees. Okay, let's wrap this up by tackling some of the most common questions people have. We'll do a little rapid-fire round to clear up any last-minute doubts. This is the big one, the #1 question everyone asks. Are the returns guaranteed? And the honest answer is no. Since mutual funds invest in the market, their performance goes up and down with the market. There's always some risk involved, which is exactly why understanding a fund's risk level before you invest is so important. Another great question.
What if you need your money back sooner than you thought? Are you going to get penalized for it? For the most part, no. Your money is usually accessible whenever you need it. However, some funds do have what's called an exit load. It's a small fee they charge if you withdraw your money very early on, usually within the first year. It's just there to encourage long-term thinking. But don't worry, it's always spelled out in that SID document we talked about. No surprises.
So, what's the big takeaway here? It's that growing your wealth isn't about perfectly timing the market. It's about time in the market. It's about starting, staying consistent, and just letting it work for you. By watching this, you've already taken the hardest step. Now it's time to take the next one.
So I'll leave you with this one final thought to chew on. Whether it's for a dream vacation, retirement, or a down payment on a house, what's that one big goal you're ready to start working toward right now? Because figuring that out, that's where your journey truly begins.